So in this video, I will explain the job costing journal entry. This was requested by a few of you. So I already posted a PowerPoint presentation in the previous video, but here I'll explain it. So if you read chapter 4, we have almost a similar journal entry. So I gave you with a maybe smaller number that is much easier to create these T accounts. So in order to produce anything here, I need to purchase our kind of materials. So this is a simple journal entry that maybe we use in any merchandising business. So we purchase material. I gave you two T account here. So we purchased $1,000 material. I called it account material control. So I debited material control 1,000 here, and I credit here debit, and I credit accounts payable 1,000. So debit material control, I name that account material control, and credit accounts payable. If you want to make a journal entry, you can simply make a journal entry like that: debit material control 1,000 and credit accounts payable 1,000. So I did not write down the journal entry for this one because I gave you the T account. You see this debit material control, credit accounts payable, $1,000. In journal entry number 2, I transferred of direct material and indirect material or overhead into our production line. So I transferred $800. See that? $800 direct material. So I credited material control and I debited work in process 800, and I credited material control $50 for indirect material, and instead of debiting working process, you see that I debited manufacturing overhead control $50. So remember this one. For direct material, we debit working process and credit material control. For indirect material, we debit manufacturing overhead control and credit material control. So this is the total of $850. Direct material and indirect material. But remember, again, $800 is debited to working process and $50 to manufacturing overhead. So let's go for the next slide. Here I have journal entry number 3. So I already have working process debited from number 2, 800. That's 800 from journal entry number 2. And I have $50 manufacturing overhead control from journal entry number 2. Here, I debited working process control, working process by $500. This is direct labor. So I debited working process 500. That's direct labor. And I debited manufacturing overhead control. This is for indirect labor. So this is indirect labor of $150. And we paid, so I credited cash control. So again, direct labor of 500 debited to working process right here, and $150 indirect labor debited to manufacturing overhead control, and credit to cash $650 that we paid. So again, remember, for any indirect cost or manufacturing overhead. We do not debit working process. We use an account called manufacturing overhead control, and you're going to see later on we debit working process by allocating our manufacturing overhead cost. So that's in further slides. We go for the next one, journal entry number 4. So number 4, I have my other manufacturing overhead cost of $450, which consists of accumulated depreciation or depreciation expense of $150, other manufacturing overhead cost of $300. So I debited manufacturing overhead control 450 here, and this is our journal entry, and I credit cash control, we paid 300. So I had already cash control from the previous journal entry 650, now I credited 300, and this accumulated depreciation, it's credited $150. So the $150 of the manufacturing overhead cost here is depreciation expense. So instead of debiting depreciation expense, I directly debited manufacturing overhead control. So we go for next journal entry here. Journal entry number 5. Now I use the new account called manufacturing overhead allocation. See that? So this is a new account that I used here, manufacturing overhead allocation. This is based on our company financial information or past experience that, let's say, for producing and let's say item like this one, how much is total manufacturing overhead cost. In this case, we estimated that our manufacturing overhead cost to produce this kind of item would be maybe $580. Now, pay attention here. I debited manufacturing overhead allocation by 580, and I credited manufacturing overhead allocation by 580, and I debited work in process 580 for all of our manufacturing overhead costs, which is $580. However, remember, we have our manufacturing overhead control. That is our actual manufacturing overhead cost. This is manufacturing overhead allocation is a budgeted of, let's say, or estimated of the manufacturing overhead cost. And the reason for that, sometimes we need to do that because I need to prepare my financial statement before all of our manufacturing overhead costs are entered into our manufacturing overhead control account. Let's say at the end of the month, I need to prepare my balance sheet, but I do not have all the manufacturing overhead costs posted. So I use the manufacturing overhead budgeted or allocation in order to, for example, prepare my financial statements on time. Just an example. So based on the past experience or financial information, I credited manufacturing overhead allocation 580, and I debited working process. Now, if you see that working process information is almost completed. So for this item, we spent $800, 500, and 580. So if I want to transfer the goods that are ready, let's say for sale, I will transfer them from a working process to a finished goods account for the total of, let's say, $1,300, $1,880. Now look at the journal entry here. So I debited again working process 580, and I credited manufacturing overhead allocation by 580. So we go for next journal entry here. Now we transfer from working process to finished goods control. So this is just, I debited finished goods here. So debited finished goods, $1,880, and credit working process $1,880. So the total of working process on this side is credited to close this account, right? And I transferred them to finished goods account, $1,880. Doesn't mean that we sold all our finished goods, right? Depends on, let's say, sales transaction. We're going to credit to finished goods later on. So debit finished goods, 1,880, and credit working process, $1,880. So we go for next transaction here, transaction number 7. Now, transfer cost of goods to cost of goods account. So this is based on the sales transactions. So we sold 1,800 of our finished goods for 2,500. Debit accounts receivable, 2,500. So debit accounts receivable, 2,500. Credit sales, 2,500. And if you remember from the merchandising kind of transaction in our maybe accounting 1, we know when if we use a perpetual inventory system or accounting, we have 2 transactions when we sell finished goods. First, we account for accounts receivable and sales, then we account for cost of goods sold and inventory. Here, I use finished goods instead of inventory. So we sold $1,800 of our finished goods here for $2,500. Makes sense. We sell it for, let's say, profit. So now, cost of goods sold is debited and finished goods is credited. So if you look at here, so I did not create any T account for accounts receivable. You can do accounts receivable and sales here, but the main kind of transaction here is transferring 1,800 from our finished goods account to our cost of goods sold account. But our finished goods account still has a $80 unsold item, which is fine. Okay. So let's go for the next transaction. Okay, so now we have other costs here. These are not inventoriable costs. I have my marketing expense cost. Fine, I debit marketing expense $100, and I credit other expenses $50, and I credit cash control $150 and paid. So these are not inventoriable costs. Simply we call them period costs. So this is our period cost and paid $150 for those. So we go for next. Here I have 2 accounts. If you go back, you can go back and look at the slides. Now we have 2 manufacturing overhead. We have manufacturing overhead control, which is our actual manufacturing costs, this one, and we have budgeted manufacturing overhead, which we call it manufacturing overhead allocation. So now, if you take a look at this side of manufacturing overhead control, these are all actual numbers. If you add them up, you get 50 plus 150, 200 plus 450, you get 650 on the debit side. But if you remember, we estimated our manufacturing overhead would be $580. So that was this number on the credit side. So there is a difference between these 2 numbers. That's fine. We're going to take care of that. It's always, most of the time, is like that. So I have some explanation here for you. Maybe you cannot read it. I'm going to read it for you. It's overhead control. So if simply says, if overhead control more than overhead allocated, this is called under allocated overhead. So if the overhead control more than overhead estimated or budgeted, this is called under allocated overhead. Now, the next case is if overhead control less than overhead allocated, this is called overhead over allocated overhead. Okay, so let's see, what does that mean? So if I allocate my manufacturing overhead here, 580, but my actual manufacturing overhead here is 650, so I'm under allocated. This is case number one. If I estimate my manufacturing overhead, let's say 700 here instead of 580, then it's going to be case number two, which is we are over allocated. But in this case, we are at this point under allocated. So let me just maybe erase those. Here. Okay, so we are case number one and we are under allocated. But the thing is here, I have to close these two accounts. So this account right here, manufacturing overhead control, has $5,800 on this side, on the credit side right here. So in order to close that, I have to debit manufacturing overhead allocation. And I explained overhead mean under allocated and over allocated one more time here. So if in order to close the manufacturing overhead here, this estimated or allocation, I need to debit manufacturing overhead allocation here by 580, and this account is closed. So here, look at the journal entry, manufacturing overhead allocation 580, and I credit that to manufacturing overhead control. Okay, so but in order to close the manufacturing overhead control, on this side I have 580, on this side I have 650, so I'm short here $70. That's why this is the case of under allocated overhead. So my actual overhead 650, I have just 580 here, so I need 70 here. So I just enter 70 here in order to close the account. So I credited manufacturing overhead control $70, right? And manufacturing overhead, if I credit here 70 plus 580, so I have manufacturing overhead control credited 650 here, right? But I already debited manufacturing overhead budgeted for 580. So I'm short $70 here. So the best account to be debited here is cost of goods sold. And your textbook has three different methods for this one. One is adjusted allocation rate approach. Number two is proration approach. And number three is write-off approach. So simply for now, I use the write-off approach, and that's something maybe you need to remember for the exam, maybe for the first exam. Okay, so simply I use the write-off approach. How did I get $70? Well, you can see the difference between 580 on this side and 650 on this side is $70. I credited this one and I debited cost of goods sold. So let's say if this was case number two here, this case right here, okay, in that case, then my manufacturing overhead actual could be less than this side. If that is the case, then cost of goods sold has to be credited and manufacturing overhead control should be debited. So that's for case number two. So this was the last journal entry in our chapter 4. And again, this is the most maybe challenging part, is just to understand this under allocated and over allocated amount. And then you know how to treat that. Use the cost of goods sold for now, which is the write-off approach. If you have any question, you can either email me or maybe when I see you in our next live session, I go over maybe a question or anything regarding the exam. Okay? So see you soon. Bye.